Greetings, Algo artisans. Dovish news. Is the number going to go up? Stocks, crypto, you name it. We'll see. We're going to start with the data right now. Okay, so we're looking at Forex Factory here, which is the website that I use to take a look at the economic data announcements. And yesterday and today were big. Yesterday we had PPI, which was the producer price inflation. It came in a little bit hot. However, price moved the opposite direction that it should have. It did move initially into a dollar strong reaction, and then it actually went dollar weak, which might have been a clue as to what was going to happen the next day. Now, inflation itself was almost a nothing burger. You had core CPI as expected at 0.3% month over month. Retail sales was also as expected. CPI month over month, that was a cool number, meaning that technically it gives us an idea that there might be interest rate cuts coming, which would make the dollar weaker or perceivably weaker. That would push prices up on a lot of things, a lot of risk assets. You have a year over year CPI with no change, kind of a nothing burger, but the Empire State Manufacturing Index was weak and retail sales was actually very weak. Overall, that's dovish news. Prices have actually been going up across markets in response to this. We've got all new highs on the S&P. Bitcoin's moving up. In fact, let's jump over to some opinions here on Zero Hedge. Just some of the talking heads. You got Neil Birrell, CIO at Premier Milton Investors, saying that the usual excitement over U.S. inflation ended up being a damp squib. A wealthy optimist calling for rate cuts and markets rallying. Capital Economics says that the data is consistent with the Fed cutting interest rates in September. David Russell, global head of market strategy at TradeStation, said that it was a trifecta of dovish news, which is all of the. We also see a little bit of a contradictory look here, and this is Wall Street Journal's resident Fed leaker, Nicky Leaks Timmy Rouse, saying that one good print doesn't offset three unfavorable ones, and it might take a couple more officials to get over the PTSD of Q1 inflation, reduces the risk of any shift to a neutral bias, in other words, opening the door to hikes. So he is not really agreeing with the prior three people here, but I would tell you that the charts, at least in the short term, are dollar weak, which means that there is an expectation that cuts could happen sooner than later. And again, September is a decent time to see cutting. The data is going to really determine that, and that's going to come out over the next couple of months. So let's move over into the charts. Now, I'm going to start with the dollar index. So the dollar index is basically the dollar compared to other relevant currencies, the pound, the euro, Japanese yen, and a handful of others. It's not a measure of dollar strength compared to just goods and services. It is a measure of dollar strength compared to other currencies, which still is a good way to take a look at whether the dollar is getting weaker or stronger. And you can see these two blue lines that I drew. The PPI came out a little hot, okay? The PPI is the producer price index, which is an input to inflation, and it's a measure of inflation. And the actual print, you see this big wick up, so that was the expected move. When you see a hot inflation number, you expect the Dixie, the dollar, to go up, because basically higher for longer, these are the expectations, maybe even some hikes, but it actually collapsed back down and started to drop, and it continued to head down into this morning's print. And then if I move this line here, you can see that it's just pretty much a straight move down, a little bit of a pullback up, and continuing down. And I'm actually in some nice trades as a result of this right now. This move the prior day, the data would have indicated that the Dixie would have gotten stronger. In this case, it got weaker all throughout the rest of the day. What that tells me is there's a decent chance that rate cuts are coming. I could take a look at some historical charts right now and show you how these rate cuts and rate hikes actually are preceded by dollar strength, by the Dixie. So let's take a look. Okay, so now what we're looking at is the Fed funds rate going back to about 2010. And you'll notice that the Dixie itself moved up starting in May of 2014. And the Fed funds rate didn't start moving up until 2016. And then you can see the Dixie starting to fall prior to the Fed funds rate falling. So there is a kind of implied, it's a correlation, but there is a bit of a lag. For example, you can see as of the pandemic, later the pandemic, we saw the dollar start to rise, and that started really in January of 2021. And then the Fed funds rate didn't start moving until February of 22. So that's almost a year's lag. And the prior lag, you're looking at a year and a half lag. So as of now, what we're seeing is, again, the dollar has started to move down, and that started to move down in October of 22. So a year to a year and a half later would be right about now. So it would make sense, at least from this lag analysis, that the Fed funds rate would start to fall just based on the dollar. And I can almost guarantee you that the smart money knows that these are going to happen. And so the smart money acts accordingly with their buying and selling of dollar compared to other currencies. So this is just, again, it's not a deep back test. I didn't go too far back. It's not incredibly reliable, but these are a few data points that do make a lot of sense. So what all does that mean for cryptocurrency, gold, things like that? Let's jump over to Bitcoin and we'll take a look. Now, historically, Bitcoin has really done its own thing. There are times when it is either not expanding or not contracting, and that's when Bitcoin might be following more of the market. Now, we've only seen Bitcoin mostly in a monetarily easy, financially, fiscally accommodative market, cheap rates, those kinds of things, right? So that's going to allow most risk assets to expand. However, this last cycle has occurred when the interest rates have actually been hiked, and Bitcoin still is seeming to perform so far commensurate to its prior cycles. Each cycle has seen less of an increase in price, the cycles are elongating, things are calming down, but we can see Bitcoin here is starting to look very strong on the near term. One thing that seems to be forming is a head and shoulders. Now, this is a daily chart, and this is looking at a consolidation that goes back to March. So the head and shoulders pattern is pretty reliable. On some assets, I have seen it be in the high 80 percentile. I have not tested it on the daily with Bitcoin. However, I would say it's probably around 80 or better as far as hit rate. I mean, it's super reliable. I've traded it many times. The way I look at this head and shoulders is it just broke out. So if I were simply to create targets based on this breakout, I would go ahead and start at the apex of this head, and this is actually a head and shoulders bottom, proper terminology on that. The 1618 extension is, you can barely see it because you have this top of this consolidation blocking the indicator, but that's actually a good sign. That means that the top of this head and shoulders, the highest that it might go based on head and shoulder metrics, would be right at the top of this consolidation, which really matches a lot of price action. So it's pretty reasonable that at this point, if this breakout stays above the neckline for more than 24 hours, price will probably start making its way back up. However, there is also a bit of a bearishness on the higher time frame. Price always could flip around. This can fail. It might only grab the 272. I mean, that can happen as well. So a lot of people think we might see a revisit down to, say, 58, 56,000. But at this point, this kind of economic data coming out with the way the price is reacting today, this is a very big bullish candle on the daily, and it's grabbing all of the different levels of liquidity that I've looked at so far to the upside. So after today's news and price action, I'm a little bit less biased to the downside. I do think that there's a decent chance price may not be ready to break that 72,000, but of course, if it does break all-time highs, that means there's a decent chance we are off to the races. Now, this can take quite a long time. If I had to just guess what would happen, I would think that price might approach the top. It might take a little bit longer than what I drew, maybe a little bit over here, up and down on the way up, and then perhaps consolidate below the top here and make its way out. That would make a lot of sense, and it would go along with the Wyckoff, the way Wyckoff usually works out. I mean, this is like pretty much a perfect Wyckoff look right here. We talked about that in the private show this morning. So right now, this is looking more and more likely. There's always that chance that price dives down to grab some liquidity, shake some people out. That would make sense. It would be very Wyckoffian. However, that already kind of has happened. The shakeout right here at 56 might have been the shakeout. And if you had asked me yesterday, I would have thought, and quite frankly did think, the price might dip down again. As of now, with this head and shoulder formation breakout, bullish news in general, it does look as if price may want to head up. Again, I just keep an eye on things. I don't worry about what's going to happen in 5 days or 10 days or 5 weeks. I worry about what's going to happen in the next 2 days or 1 day or even the next few hours. That's how I trade. So I take it level by level, and I would be looking at my next local resistance pretty much at the midpoint of this range, which is the peak of this first neckline shoulder meet, and that's going to be around 66,000, 66.5. So price probably is going to make its way up to there right now. If it does, then we'll have to watch how it behaves around that time. That's about all we have time for. I hope this video was helpful. Please have a listen to one of our clients' testimonials. He's putting his algo together. He's got some good projections. Let's hear what he has to say.
Hey guys, so I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned a massive amount that I use almost daily for trading, reading charts, using indicators, and understanding different aspects of the market. So I found the course incredibly easy to follow, and the interactive style of teaching is incredibly beneficial. So now that I'm comfortable in my trading ability, I'm starting to invest more capital, and projections are looking very promising. My goal is to be trading full-time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
Okay, thanks for listening to that. Come on over to algofactory.tech. We teach people how to build trading algorithms. You don't have to know how to code. This is just a simple trading method. You can trade manually if that's how you want to do. A lot of people do that. And in the meantime, don't forget, trade your job, upgrade your life. We'll see you on the next one.